Well, hey, I'm Scott Hanson, Allworth Financial. This is our Money Matters Brief. I'm here with Pat McClain, and we are working out of our home offices. Hello, Pat. Uh,
Scott?
and so like many of you, we are sheltering in place and moved our work environment from our office to our home, but we're here still serving you, and we're coming out with this new Money Matters Brief is what we're calling it, which is essentially an 8 to 10 minute Zoom call where Pat and I are talking about something the latest in the marketplace or news, something that impacts you financially that we think you should know about.
And we're going to talk about the CARE Act, which stands for Coronavirus Aid, Relief, and Economic Security Act. So yeah, there you go.
And you wonder how much time Congress spends over coming up with acronyms instead of,
Yeah. Well, this is different than the Secure Act. This is the CARE Act. So
yeah, they had the Secure Act a couple months ago, didn't they?
Yes.
The end of December, the Secure, and now the CARE. We'll see what the next one is. But this is a $2 trillion stimulus package that the federal government has put into place. And there's many impacts that it's for Americans. We're going to highlight a handful of these, particularly the ones that impacts individuals. There's a number of things that have an impact for companies as well, particularly small businesses. But we want to go over some of the main things for individuals. And Pat, I think the one that was kind of interesting right off the bat is we're just going to send everyone a check.
Right? Yeah, just like, here you go.
Didn't it remind you back in after 9/11 when Bush came out and said, I think it was a bigger check back then, though, wasn't it? Like $2,000?
I don't recall.
They wanted us to go out and spend.
Well, the problem here is that sending a lot of people the check isn't going to actually change their spending behavior because they're not getting out of the house to spend it on anything.
My wife and I were talking the other day. It's like we're hardly spending anything. She said something about her grocery bill because we have the kids at home, and I said, yeah, but what else are we buying?
Yes.
And I noticed that Macy's had several 100,000 employees that they were talking about. They want to know how long they can keep. I'm thinking, well, who's buying clothes in this environment?
Well, they furloughed them this morning, Scott.
Oh, I missed that. Okay, then well, there we go. Then so it's $1,200 per individual, $2,400 for a family. If your income and you're married, it exceeds $150,000, it fades out. If you're single and your income exceeds $75,000, it fades out. But
and $500 per child.
Yeah, and they increased unemployment benefits. So unemployment administered by the states, federal government said we're going to throw in additional up to $600 for unemployment. So Pat, I think a lot of people are going to get over $1,000 a week.
We'll see how this ends on the back end. When restaurants and businesses open, whether the difference between the unemployment check and actually earned income is that narrows, people are less likely to return to the workforce.
Yeah, well, yeah, it might have some unintended consequence there. Another biggie is the mortgage forbearance, and
not forgiveness. Well,
basically, if you've been impacted by the COVID-19, and there's a whole different ways that you can say been impacted, which should apply to just about everybody, you can simply tell your mortgage company, you're supposed to do it in writing, tell your mortgage company that you can't make your payments right now, and they say, okay, automatic 180 days, you don't have to make your payments. If after 6 months you still can't do it, you just let them know again. They say, okay, another 180 days, essentially a year without making payments. But Pat, what does that mean as far as the interest?
Well, it's not forgiveness, it's forbearance. So all it does is it adds to the backside.
Forbearance is not a term I use in my normal vocabulary.
Yeah, although I've actually read this last week, I've seen the word forbearance in more things than I've ever seen it in a relatively short period of time.
I had to look the word up.
It doesn't change what you owe or the interest rate. It's not forgiveness. It's just added to the backside of the loan. So if you owe for 25 years on your loan and you don't pay for the first 180 days, you're going to owe for 25 years and 6 months, unless you apply for the second forbearance, which extends it to 360 days or a year, if you will.
But for many people, their mortgage payment is their largest fixed expense on a monthly basis. So, you think about this when you added the unemployment benefits, many people are going to have more than $1,000 a week. You take a married couple, let's say an average American family, if you look at it now, they've got almost $100,000 a year in income, plus they don't have any mortgage payments.
Well, Scott, but I think this is great, and the reason is it's going to actually stop a lot of the problems we had with the last crisis, with massive bankruptcies and foreclosures. The government's just trying to keep everyone in the game so that when this clears, and this too shall pass, there will be a vaccine, there'll be therapeutic treatments. The government wants it so that you can actually get back to normal life without a completely devastating financial disruption.
Yeah, I think you have a good point. And obviously, there's things that things I don't like in the bill. There's things you don't like in the bill. But at least this time they're coming at it a different way. Instead of waiting until people default on the homes, then they get foreclosed, and then trying to clean up the mess afterwards. They're trying to prevent this in the process. Also, some changes on IRAs. So IRAs, they're going to allow for up to a $100,000 withdrawal from an IRA. And it's not going to be subject to a 10% early withdrawal penalty. Still subject to taxes, just not early withdrawal penalty. The states, if you reside in a state that has that, the states need to comply with that as well. They haven't all stepped up to the plate yet. They probably will, but I wouldn't take any money out. I wouldn't recommend taking money out of that anyway.
But if you need to, you get to pay it back in 3 years, or you pay taxes on it over a 3-year period.
Yeah, but you'd be better off doing mortgage forbearance than pulling money out of your retirement account under age 59 and a half. Because odds are you will be old one day and you're going to need these dollars. And if you spend them while when you're young, then it could be a challenge. So required minimum distributions, they put a pause on those for this year. So they say you don't need to take required minimum distributions for 2020, which might be of benefit to some that are stuck with required minimum distributions. And if you're on required minimum distributions now, maybe you're having a monthly income because of the RMDs, you might want to just talk to your financial advisor, your institution, say, let's just put that on pause. Don't want to worry about it for this year if you don't need the dollars. And it's something you consider doing. And maybe instead of doing that, you look at doing a Roth conversion this year. So a lot of these, there's other financial planning implications here. We're not really going deep on that, but just kind of letting you know what some of the facts are right now. Increased charitable contributions, so they're going to allow you to can give away up to 100% of your income this year and take a tax deduction. So for the four Americans that's going to apply to, they can afford to give away 100% of their income. There are some planning opportunities around there, and kind of joking, but if you're looking at doing a charitable remainder trust or something like that, something like this could certainly be of help. Student loan relief. If you have student loans, you don't have to make payments or interest until the end of September. And the qualification for this is just essentially everybody. So you don't have to be unemployed or whatnot. It's going to have an impact for you. And the final part is the income tax filing, where we don't have to file our income taxes or pay taxes. Our taxes due until middle of July.
And that includes, I'm sorry, Scott, that includes your quarterlies. If you pay quarterly taxes, you could defer those as well till July.
Yeah, so up until July. And then as far as small businesses, there's a number of different things. The Small Business Administration came out and they said you can have a loan of up to $10 million. And based upon certain factors that might even be forgiven in the future. There's different tax credits. If you have an employee that goes out sick because of coronavirus or related to the coronavirus, you can get some tax benefits there. So, and there's a number of different things that has to do with businesses. So if you own a small business, take a look at some of those. Talk to your accountant.
You know what I thought was most personal on the most interesting on the small business is no personal guarantees or collateral required. You just ask for it. You prove you need it. They're basically saying if you don't pay it back, we're not going to take any of your property, and it won't affect you financially, personally in the future.
So what would your recommendation be to any small business person?
Take it.
Right, take the money, figure out how to get it be forgiven. I mean, you know, like it's
you can pay it back
in the same way you itemize your deductions and take advantage of. Everyone else is looking at this like, how does this apply to me? What do I need to do? And you should be asking yourself those same questions as well. Of course, here at Allworth, we've got teams of advisors that are helping people out with these sort of things on a daily basis. And for our clients, we're certainly grateful that we have the opportunity to be serving you. Of course, Pat and myself, we're both working out of our home offices right now. And hopefully one day we'll be back in the office. But the nice thing is we've gotten so proficient with Zoom, and our advisors are meeting with their clients all day long using Zoom. Actually, I had a meeting I did a telemedicine meeting with a doctor this morning on something similar to this. I'm like, I'm not ever going to go see my doctor again.
Well, you know what's interesting, Scott, is they changed the laws that allow that. 2 months ago, it wasn't as easy to do because of the privacy laws around that. So what's happening here is affecting all of us, and many of the things that we are learning in this process it will change the way that we interact with each other, and most certainly will change the way business is done. I will point out before we leave that if you own a small business, talk to your tax advisor or Allworth Tax Solutions about how these changes affect you and how you should be thinking about taking advantage of them if they are the right thing for you to do.
Yeah. Well, that's about all the time we have for this week's brief. If you want a full summary of the CARES Act, just go to allworthfinancial.com, or I think there's a link right on the bottom of this webpage, and I'll take you to that. And also, Pat, we've got 200 of our associates around the country working just like this, and we've got our 50-plus advisors, certified financial planners, whatnot, meeting with clients just like this on a regular basis.
In fact, I was talking to an advisor the other day, and he had an appointment with an 82-year-old man who had never been to Zoom. And easy enough to send him a link. The gentleman clicked on it. He's been a long-time client. He loved it, just loved it.
Yeah, so stay tuned for the next edition of Allworth's Money Matters Brief. Thanks a bunch.
Take care.